Kitco News special coverage of Messari's annual Mainnet Summit is brought to you by Oasis Pro.
Bitcoin still may be the 800-pound gorilla in the cryptocurrency sector, but can that dominance last, and does it even deserve to? I'm Matt Nesto for Kitco News here on the sidelines of the Mainnet conference in New York City, where a number of other virtual coins and blockchain platforms are vying to blaze their own trail. Joining me to discuss the current environment and the obstacles and opportunities that lie ahead for blockchain and cryptocurrency is Austin Federa. He's the head of strategy at Solana Foundation, also the host of the Validated podcast. Austin, thanks for coming on Kitco.
Thanks for having me.
So let's just talk about this. You know, the dominant 800-pound gorilla for Bitcoin. Do they deserve that laurel? They have it. You know, that number kind of goes up and down a little bit, but does it deserve to be? And how does the future look for its maintenance of that dominance?
Yeah, I mean, look, Bitcoin fought its way to where it is today, and I don't think any of us would be here for the success of Bitcoin, right? That is the real thing that unlocked the industry and started this whole process moving forward. But, you know, Bitcoin has always compared itself to digital gold, and I think that is a really good analogy. There's still a role for gold in the market. Gold is not 80% of the traditional financial space. It is not 80% of the world's market cap, right? It has a role to play in that space. And I think Bitcoin is something very similar in the crypto space. It started out as the only thing, and now it's one of many things.
I heard it likened to the Model A Ford, like revolutionary, groundbreaking, you know, put an industry on the map. Yeah. It was the namesake for a long time. Do you see the parallels there? Do you think that's a fair analogy?
Yeah, I mean, I think there's some parts of the world of crypto that have just moved on from Bitcoin, right? There's no smart contracts on Bitcoin, which is where all of the exciting work is happening nowadays. The ability to actually run programs in a decentralized manner across any blockchain. That's what Uniswap is on Ethereum. That's what all the DeFi revolution is. That's what NFTs are. You can't really do that on Bitcoin, and that's okay, right? Bitcoin is, a lot of its value is derived from doing just one thing really well. But the same way that, you know, if all you're doing is holding a commodity in your portfolio, there's less opportunity to do something with that. There's new products like derivatives, right? There's a whole financial world outside of just holding one thing.
Yeah, and one coin.
Yeah.
And so I'm guessing that if I looked at your daily planner, a lot of it isn't about SOL, Solana's coin. It's about the blockchain. It's about all kinds of other things that aren't, you need the coin to like start the engine, so to speak. But is there too much emphasis on coin alone?
Oh, certainly. Yeah. I mean, look, the role of a smart contract blockchain like Solana or Ethereum, which is different from Bitcoin, which is really meant to be a store of value network, is that you use the native currency to pay transaction fees on the network. But that's really the whole value of what that currency is. It's the stuff built on top of it. And sort of much in the same way that like the steel factory should be making more money than the mine, and then the bridge should be more valuable than the steel factory, and then the amount of economic activity that passes over the bridge should be more than the cost of building the bridge. These things are layers, right? And so most of the work nowadays on blockchains is on the application layer. And that used to be DeFi, decentralized finance. That was NFTs for a while, but we're seeing now are consumer-focused applications that are saying we have an alternative to social media where users actually own their data and they own the network they're transacting on. And that stuff is being built on blockchain. And so the actual, you know, underlying dynamics of that layer one, it's sort of like the power grid or the freshwater supply or the road system. You don't really need to think about it much day to day. We just sort of trust that the power grid's going to work, that, you know, I turn on the tap, the water is going to come out, right. The bridge is going to work. And so all the attention is really stuff we build on top of that base layer. And that's kind of the best analogy for how someone like me spends their day. I certainly work a lot on the network dynamics of the Solana network, but you know, there are thousands of developers building thousands of applications on top of the network, and that's where all the excitement really is.
Well, and also there's a lot of exciting areas too, and a lot of, you know, discussion points, and not all the excitement is good. Like sometimes boredom is a nice thing. You know, volatility is an issue. But before I get there, I wanted to just follow up. You mentioned, you know, the consumer. How important is the non-consumer user to the future and growth of virtual coins and the blockchain?
Yeah, so there's sort of a few different user groups that are building on blockchain that really make up the core usage. There's the folks who are speculative, that are just holding an asset and hope it goes up in the future. And they're a part of the ecosystem, but honestly, they're not contributing much. right? If you buy and hold Bitcoin, it's not like you're making Bitcoin better. You're just gaining from its upside. And that's a totally valid endeavor, the same way owning a share of Tesla is a valid endeavor, but you're not actually helping to make Tesla a better company. Additionally, then there's the consumer-focused applications, but the new use case are companies like Visa. And Visa is now building on the Solana blockchain to do merchant bank settlement between Visa itself and the merchant banks that they use, using USDC, which is a regulated stablecoin released by Circle. Those sorts of enterprise adoptions are actually something we're starting to see more of. I think more and more of the traditional financial space is going to start transacting on blockchain because it offers things like incredibly fast finality and settlement. You can send an unlimited amount of money anywhere in the world in less than a second for a fraction of a penny. That is not something that the Swift network can support. That's not something that any other money transfer system in the world can support. And as long as you have faith that that underlying stablecoin, in this case issued by Circle, is fiat backed, which Circle publishes daily reserves to show that that's indeed the fact, you can build a whole slew of new financial applications on top of the networks now. And this is where companies like MoneyGram and those sorts of companies are really feeling pressure from blockchains, is that now, as a consumer, you can send money across borders, whether that's to pay an invoice or send money back to a family for basically free. And if you're a company like Visa, you no longer have to move hundreds of millions of dollars at 9 a.m. on a Monday to make up for the balance sheet over the weekend from all those credit card transactions that posted over the weekend. But, banks don't usually move money on the weekends.
Because you're going 24/7.
24/7, 365.
Right. So let's talk a little bit about the volatility, the unwanted sides.
Yeah.
We woke up on a Monday recently and the New York DFS made a big announcement. They culled their green list down, kicked off some pretty well-known coins. How does that kind of volatility, and market volatility aside, because that's kind of omnipresent and always going to be there, but how does that kind of volatility help or hinder your job?
So it's really tricky. What I would say is that in the United States specifically, there's no rules of the road to follow, right? Even what the SEC is doing with enforcement through action as opposed to rulemaking is really hard for companies to adapt to. And this is not crypto specific. You see this in every industry where Congress is not passing legislation, and instead we are seeing enforcement as a way of making rules, which is not a good way to go about it. Now, DFS is an interesting one because, in some ways, New York has done a good job protecting consumers, and in other ways, they've held back the industry. So,
like what?
So New York is really the hub and center for blockchain in the United States. You'd think it was San Francisco, but it's really New York, because New York is a city that is not run by tech. It's a city that has tech, it has finance, it has art, it has culture, it's all these things together, and that's kind of what blockchain is. It's not financial. People often think of these networks as primarily financial networks, but it's sort of like thinking about the internet as a financial network. We don't think of the internet as commercial. We think of the internet as an information tool. That's all blockchain is at its base layer. Now, stuff built on top of it might be your internet banking, right? But no one sort of assumes that to get on the internet, somehow that has to comply with financial rules and regulations. It's the applications built on top of it that might need to. And so, what we would love to see is clear rules of the road from Congress as opposed to a state-by-state approach. But DFS is largely seen as a success in the policy world. And so there are many, many states that are now looking to copy the model of DFS. And, from an industry perspective, it's pushing people offshore.
Well, that's always a problem too, and we can talk about that as well.
Yeah.
But I wanted to just kind of delve in this volatility in this regulatory environment as well. And it's interesting that you brought up the notion of not regulating by enforcement. That's sort of after the fact. It's sort of, you can't really work with the mouse after its head is in the trap. It's a little bit late. How do you go forward with that, and how do you welcome new investors into the tent at a time when that uncertainty is there? I mean, it sounds like that is almost job one. I'm visualizing you walking around facetiously with the cardboard "Regulate Me" sign. I don't know if you need that to be validated, or because that is part of the marketing of sorts. It's like, we are regulated, we are this, we're that, etc.
So one of the really tough parts right now is exactly that, right? So if you are trying to start a startup, a normal Web 2 startup, you're a SaaS company or something like that, it's a few $100. You go file an LLC in Delaware, you pay Stripe some money, they make a company for you, you get a Google account, and you're off to the races. You can start building software. With crypto, it's very hard to get started with less than $500,000 in legal fees. And that's not because the law work required for blockchain is particularly complicated. It's because no one really knows what it is. So any law firm you talk to is going to say, here's a whole slew of things you should do defensively in case regulation moves in this direction or this direction or this direction, because by that time, it's probably too late to fix the problem. And so you have to do a ton of extra work just to start building on blockchain if you're trying to launch a token or do something like that. And so we're seeing more and more people move offshore. And this is really too bad, right? We saw Hong Kong has changed their regulations recently to make it much easier to build blockchain there. Dubai is kind of leading the world on this. Singapore is as well. And you can imagine what would have happened if in the early 90s, the SEC or the CFTC had said, you know what, we don't really think this internet thing should be built in the United States. We think it should be built in China. We think it should be built in Europe. We think it should be built in the Middle East. We would live in a very different world today. We would not have this free flow of information exchange. We would probably have much more controlled networks like you see inside of China right now. And that probably would have been worse for the world in general. And so, the best companies are still built in the United States. And what I'm worried about is that the more we push crypto offshore, the less of these companies are going to be built in places like New York and places like the United States.
I mean, it's a clumsy analogy, but better the devil you know. It's all within, it's here. It's regulated by agencies that we trust with, intentions that presumably we trust.
I mean, look at all the controversy around TikTok, right? The controversy around TikTok is entirely because that is the first social media company that is not owned in the United States, right? Now, they happen to also be owned with a geopolitical rival, but you could see this sort of thing happening across blockchains as well. And that's really not the vision that folks in this space are building towards. Everyone I talk to, 99.999% of blockchain users, and especially those people who are building, they just want to build amazing applications and try and change the world. They don't want to run afoul of rules and regulations, but they do not know how to comply today because there is no set of rules that they can read or have their general counsel read and say, great, as long as we do things this way, we're going to be in good graces with the United States.
So as a strategist, do you foresee the sunset of Bitcoin, or at least it's, I think the last number was 49% dominance rate or some such thing?
Yeah.
Talk to me 12, 24 months. Like what's the time line look like for that as you go out?
So I think what we're not going to see is Bitcoin fall from its absolute dominance. I think we're going to see the relative position start to change over time, right? We're as we look at a next, the market recovering, if we get more clarity in regulation and people come back to building, it's very unlikely that we're going to see Bitcoin drop off the charts. What we're probably going to see is it may not rise as fast as some of the other things do, right? And this makes sense, right? There was a time when mercantilism and the amount of gold you had in your basement was the sole indicator of wealth, right? That was the Spanish Empire. And we see that stuff changes over time, and we see that the US dollar rose and other currencies fall, and there will still be a role for Bitcoin in this world. And actually there's a bunch of different versions of wrapped Bitcoin coming to Solana, and people are very excited to trade Bitcoin on Solana. But these are the sorts of things where over the long term, I think Bitcoin is best thought of purely as a commodity for store of wealth. And there is simply a larger scope of possibility in decentralized finance and in the world of cryptocurrency, and especially blockchain networks, than just store of value.
Where are the green fields? We talked about the green list. We'll go to green fields. Where are the green fields of opportunity?
So there's huge
They're pre-applauding your answer.
So there's huge field opportunity for digital dollar products and digital currencies for other foreign currencies. So, you see PayPal moving into the space, launching a stablecoin product. Circle obviously has the sort of probably the most reputable stablecoin product in the United States, but you see them launching a Euro stablecoin. Central banks around the world are experimenting with central bank digital currencies, which are basically a government-issued stablecoin. So there's lots of room and opportunity there because the traditional financial rails are slow and inefficient in most cases. Additionally, if we look in other areas, social media and decentralized social media is another really big space that we're seeing a ton of growth in right now. One of the great analogies there is most people don't like the fact that these social networks are primarily advertising driven. Advertising is a pretty vicious business model. It creates a lot of bad incentives between the users of a platform also being the customers, right? In some ways, what Facebook is an ad tech company at the end of the day, Google is largely an ad tech company. All the product they build is in service of selling ads, and they built some amazing products, but that is a bad dynamic, I think, for the long term for these companies, and folks are looking for an alternative. Another area we're seeing is decentralized physical infrastructure networks. And these are a really interesting category where if you think about blockchains, the value proposition is there are thousands of computers all around the world running this software. Decentralized physical infrastructure is the next step in that, where we actually start to have the location of that hardware matter. So Helium is a great example. So Helium has users running basically 5G networks out of their house. And it creates this coverage mesh network that can actually start competing with telecommunications companies. And they've launched a 5G cell phone coverage program in the United States right now. Another one is HiveMapper, and HiveMapper is building sort of a decentralized Google Street View. And so, if you drive an Uber, or if you just drive a lot for work or just personally, you can get one of these dash cams and you can mount it in your window. And it takes photos every 10 seconds as you drive. And that camera quality is lower than a Google Street View. But now using AI, you amalgamate hundreds of images from tens of different drivers over the same piece of road. And you can start to ask questions like, how well is this road plowed in the winter usually? Right? Questions you actually can't answer through Google Street View. And so that is a whole new space that we're already seeing a ton of adoption in.
I want to switch gears a little bit here and go to something I read on your website. It was under the heading of Why Solana? It says, in order for people to build, and I'm quoting, in order for people to build the projects that will get the public using blockchain technology, you need to make it as easy and painless as possible for people to experiment and use the technology as possible. So obviously I'm preaching to the converted here,
Yes.
But tell me about that in terms of what's actually being done to convert those people and to make it more than just a coin that changes in price unpredictably.
So I would say the last 8 years of blockchain has largely been experimental. It's been trying to find product market fit. It's been building out those primitives and those use cases that people can then take and say, I can see how this gets integrated into a company like Visa. Now, today, most traditional companies that are building on blockchain, it's an experiment still. It's in that R&D experimental department side of it. But eventually, that number is going to start to move. And when we get 1%, 2%, 5% of revenue for these large enterprises that are building on blockchain, coming from places like the work they're building on top of blockchain networks, that starts to change the calculus. That starts to say, look, owning a newspaper for many years was a very good business, even when you could see the writing on the wall that the internet was coming for their lunch. And that doesn't mean that just because we have a transition into blockchain for a lot of the stuff, that doesn't mean it's going to hurt the traditional companies per se, but they're going to have to start adapting and figuring out how do we actually start building products and services built on blockchain that are built in a fundamentally different way. The same way that the internet changed how we consume news, it changed how we pay each other. Right? All of these fundamental changes were made possible by base layer technology. We're just at the cusp of that transformation today, where the enterprises and the large publicly traded companies are starting to notice blockchain. They're starting to sometimes see it as a threat, and they're asking themselves in very serious ways, how can we start using this technology to make our own businesses better or make our own businesses more profitable?
Like what's an example of a business or an industry that feels threatened by the blockchain that isn't involved in it now?
So Visa is a great example of something like this.
Yeah, and you just mentioned you guys just did a deal with them.
Exactly. So they're starting to build a bunch of this infrastructure on the Solana network, but credit cards right now, it's 2.875% when you swipe it for a merchant for the most part. The fee to transact on Solana is $0.00025.
It's a mile wide.
Yes. And yes, a bunch of that 2.85% goes to fraud prevention technology, but when you're using a blockchain, the fraud is much lower, right? Because these things have to be cryptographically signed. And so what we're basically talking about is disruptive pricing for payment processors. This is why Shopify actually is now, they have a module they've added so that any Shopify merchant can start accepting USDC on Solana. And their business model is changing from processing payments to selling a software subscription service for websites, right? And these are just small changes that are starting to happen, but we're going to see more of this over time. T-Mobile is actually working with Helium on a hybrid network that uses T-Mobile and it uses these community crowdsourced networks as well.
So you mentioned the 24/7, 365. You mentioned cost, speed. Yeah. These are the kind of things, and big partners. Shopify, I believe you guys are dealing with, Visa. And so these are the kind of bricks, I guess, that you're building that are going to kind of indirectly bring consumers to the tent, the big tent again. If I understand your roadmap forward.
Yeah, I mean, the early days were developers building applications for users, right? Now that was what we had, and that was amazing and great. But that's sort of like the days of the early internet, where it was largely academic researchers talking to each other over this new thing called the internet. And then eventually you get message boards where people who maybe like the same hobby are talking to each other. And eventually you see businesses start to come online. And that's when everything changes. That's when the adoption curve spikes. That's when the usability goes up. That's when when businesses have to figure out, wow, suddenly my store can sell to anyone in the United States, and all I need to do is put something in the mail. That is groundbreaking, right? They no longer need to ship catalogs around the world and have little postcards and all this sort of process. E-commerce fundamentally changed the way that the markets work in the United States and a lot of the world. And so blockchain has that same potential.
So we talked about the importance of the US having a seat at the regulatory table. Interestingly, your upcoming conference for Solana is going to be in Amsterdam, which speaks to the global nature of the business, but you'll be there first and foremost as a US domiciled company. Tell me about the globalization of the blockchain platform and how important that is, and the sort of tailoring of messages that you might have to bring to, I'll just say it'll be a predominantly European audience in an area that's known for different privacy regulations and standards.
Yeah, so Amsterdam is a great location because, especially after Brexit, that is sort of the hub for tech in Europe. But it's also an area that is fairly easy visas. I mean, we would love to do a conference in the United States, but we have a lot of developers in India and Southeast Asia and other places around the world where them getting permission to attend a conference in the United States is just harder. And this sort of speaks to some of the barriers to both being an entrepreneur here, but also engaging with US markets. But blockchains are inherently global, right? While a bunch of the technology is built by people in San Francisco and New York, the networks are run by 2,000 nodes all over the world that are all permissionless. And, the majority of those are outside of the United States. And so by having the global network model here is really important to keep in mind. That this is very much like the internet, where the internet is not a US company or a US project, it's a world project at this point, even if it was invented and started in the United States. And so, in Europe, we're seeing things like European stablecoins get issued. Dubai has a really friendly licensing regime for companies that want to be domiciled there now because they see this as a competitive advantage where they could start pulling entrepreneurs away from other countries. And in Asia too, it's the same sort of thing. Singapore has become a hub for crypto in Asia because they've built a regulatory framework that is flexible and open to founders. Japan is also on that same trajectory where they're actually starting government-sponsored Web3 incubators. And so that sort of thing, the United States is in a luxurious position where it doesn't have to court blockchain developers, right? The US tech industry is incredibly powerful. And so all that, the folks in the industry that are advocating for the United States to come up with regulation, we're basically saying, please let us stay here. Let us not have to move abroad. Let us keep the United States as competitive and the best place in the world for entrepreneurship.
Austin, thanks so much. I really appreciate your time and expertise, and look forward to catching up again soon.
Yeah, thank you.
Austin Federa, he's the head of strategy at Solana. For Kitco News here at Mainnet, I'm Matt Nesto.
Kitco News special coverage of Messari's annual Mainnet Summit is brought to you by Oasis Pro.